What's going on? This is TerrenceRe. I see I got my bingo hat on today. Joe Cool did his thing yesterday. It's over for Tom Brady. I'm officially um, shutting down his career. Joe Cool did it yesterday. Y'all see the Bengals put on yesterday. Just in case you guys didn't know, I was born in Cincinnati. Um, and pretty much live all my adult life though in Georgia, but grew up a Bengal fan. So what you're looking at on the screen right now as we get to this market is what I would call I think is going to be a classic inside day. I don't think we're gonna get any big moves this week. But then again, I don't know for sure. Also, stay tuned to the end of the video. I am going to share my expected move indicator with you guys. If you have a Thinkorswim, um, download it to your PC. You can um, you can upload like I can share indicators, and so you'll be able to put that on. And once you put it on your desktop platform, it'll also be on your app on your phone too. Should be. And so I'm kind of well, I'll talk more about it at the end of the video. So right now we got the S&P 500 is down, well, basically flat. You see it's only down like one handle. The whole market is pretty much flat. We don't have any big moves. The VIX futures are down. So with the volatility being down, that lets me know that we're not going to get a big down move. Also, the XLF, the financials is up, and you pretty much, if the financials are up, it's been my experience with that you're not going to get a big down move with the financials being up. The XLE is up, so I'm not looking for us getting a big down move. We're actually on the advanced decline line. Let's take a look at the market watch. Let's look at the index watch. We'll look at the S&P 100, and then that'll give us a good synopsis of what. So as you look at the S&P 100, we got 63 advancing, about 37. So you got about 2/3 of the S&P 100 up, and you can see your biggest down mover looks like is Meta. Meta is down 2.5%. And what is this right here? Disney. Disney is getting smoked, down at 87. Let's take a look at Disney. Since Disney is down, and then we got Meta, and let's take a look at Disney. Maybe we can let's take a look at Disney. Is Disney a bargain? Does anyone think Disney is a bargain at this price? Um, I don't know. You still got a low right here of 86. It has not taken out this low. When you're trying to pick lows in the market, it's tough. Let me pull up my indicators. It's tough when you're trying to pick lows, trying to pick a bottom. It is not oversold. Now it was oversold here, but it's not oversold here. So you could get a bounce. I don't know. I don't think you have to pick a bottom here. I think you can wait. If you're just trying to if you just gotta have it at 87 as opposed to maybe letting it make another high, maybe getting it at 100, yeah, you're gonna lose $13. But if it runs up, you know, you I don't know. That just depends on you. You can get a better buy here, but if you're wrong and it continues to go down, I just wouldn't go real big. You can dollar cost average in. If you're gonna go in, let's say if you're doing 100 shares, maybe you go in with maybe 25 shares. Then if you see it pop, maybe you put in another 25 or maybe 50, half your position here. And then if it takes out this high, you go in with the other half. So what that would mean is like you'd have, if you got in at 80, let's just say you got in at 87 and then you got in another half at 97, that would make your cost basis $92 for the overall position. So that would be like dollar cost averaging in, instead of going in with your whole position and then maybe it continuing to go lower. So that's something you can do. But Disney, and I think Disney pays let's see. No, it's not showing they paying a dividend right now. I think they used to. They may have suspended the dividend because I do not see it right here. You come to the trade tab on Thinkorswim, it would be right here. You see dividend and dividend frequency. You'll see the ex-div date. Let's see. Let's take a look at. So let's look at Apple. I was looking at Apple before I started. Apple got an IV rank of 49, which I would think is pretty good, prime for selling. If you want to sell premium, it's down right down here in this gap area. See it? See why I got it highlighted for support? This is a support area. This isn't, in my opinion, this isn't a bad place to maybe put a trade on. Could get a pop, could run right through it. Now I do have, did I just delete that? I do have levels. I do have another level down here. I just don't have it extended all the way across. You can see I got Apple going down to around 115. That don't mean it's gonna go straight there. So it could pull back a little bit and you can get that pop. So if you was to me, I wouldn't buy Apple. It's more of a trading vehicle at this point for me. If I was gonna do anything, I'd sell a put spread, right? And then when you get that pop, take profit. Because I could see it popping maybe tomorrow. If it pops tomorrow or sometime this week, you get a little pop right here because of this support, and it'll bounce back up in here and hit resistance at like 140. So that's like an $8 move. And then I would take profit. I would not hold it because I do think it's going to continue to the downside, because we're almost at this point guaranteed. Almost, I'm ready to guarantee a recession is coming. Probably the end of 23, sometime in 23, or maybe the beginning of 24. And this is why I say that, and I think a lot of analysts are saying that, right? So let's take a look at. I'm gonna show you another trigger. Where do I want to go? Tools? No, that ain't what I want. Analyze. Come to the Analyze tab. Come to Economic Data. We're going to take a look at some interest rates, and then we're going to look at the 10 minus 2, the 10-year. We're going to look at the 10-year, 2-year, right? So it's the 10-year Treasury constant maturity minus 2-year Treasury constant maturity, right? I'm going to click on this. You're going to bring it up. All right. Now, I'm going to zoom in a little bit. I'm going to hit this plus symbol down here and zoom in. We're going to zoom in some more. Now, what I want to show you, we're back at, all the way back at 76. All right, 1976. Now, the highlighted area right here, they have, this is recession. This highlighted area is recession. If I come up here and click settings, you see right here where it says recession, I have it checked. If I take this check off, nothing's there. When I place that check back on, it's highlighting the area that was considered a recession. And what I want you to look at is the time preceding this recession. I want you to look at the inversion of the yield curve of the 10-2. So anything below 0 is an inversion. So you can see right here, we got to first inverted in 78, and it stayed inverted all the way to 78 through 79. And then you can see in December of 79, you can see the recession started. And we stayed in recession, or what they considered recession, all the way for to June of 1980. Now, let's look over here. inverted again, right? Right around here, September 15th, 1980. And we stayed inverted for a year or so. That's why it's kind of hard to know like exactly when you're going to hit it. But for the most part, every time that the yield curve was inverted, then the recession would start afterwards. Man, sometimes it took a year, you would stay inverted. And now look at 81, 82, and all the way through 82 to like October. Now let's go to most recently. Some things that we can identify with. Here's the .com bubble bursting. Here's the zero line right here. It inverted. The inversion came off. And then we got our recession here. .com bubble. Right? That's just the 2000s, 2001. Now, let's come over here. Let's look at this right here was the housing bubble. Here's where's the zero. The zero line is down here. This is the zero line. It got inverted here in January 2006. We were inverted all the way, and they say the recession hit right around here, 2007. Right? Let's go look at. We can come, and then that's it. Now this is just the one. I've done a previous video where I did the 10-year and the 3-month. Right? But if we're just doing the 10-year and the 2-year, if you're looking at it actually a small inversion in 2019. Small inversion right here, right? And then we all know what happened then. COVID hit. But they on this particular chart, they're not counting COVID as a recession with the 10-year, 2-year, the 10-2. They're not calling that a recession, but we know what happened then, right? Just because we lived through it. We had that small inversion and then that happened. Now let's look at what's going on right now. Look how steep this is. This is crazy. Like we got the inversion right here, right around July of this year. And we're not only did we get the inversion, guys, we're still inverting. Like, like you got your inversion and then it's just continuing to invert. Like so and you see like right now we actually got like a little reprieve, right? Right here at the bottom where it went to negative 0.8. So I say all that to say this. We can't time it though. We don't know like exactly when we're gonna have it, but that's why you see these guys coming on. If you're watching some of these news networks, you see them come on and they're like, yeah, we're gonna have a recession. We're pretty much guaranteed one. They're looking at previous history. They're looking at yield curve inversions, and then they're making these decisions, but we just don't know when, right? So more than likely, if I gotta make a guess, as long as the Fed is raising interest rates, I actually don't think we're gonna have the recession until they stop it and they begin to ease. And then you see this curve then relax. And once it breaks this zero line right here, once we get it to break zero and begin to uninvert, and then that's when we'll start seeing it. So these are some of the things that you can come on and you can look at on the platform, and you can kind of check it out. Let's go. One other thing, let's go back to the chart. And I said that if you guys hung around to the end of the video, I had something for you. And I'm going to share at the request of a guy that watches my videos. I am going to share my expected move indicator, or an indicator that I have. I'm not gonna say it's mine. I ain't make it, but I got it from somebody. So I'm gonna share it with you guys. So all I'm gonna do is come up here to this flask. I'm gonna click on it, and then I'm going to. I gotta find it. No, I didn't have to do that. I didn't have to come. I think I can come. First, I got to put it up there. This would be easier for me to put it on the screen. All right, now it's on my screen. And you can have this indicator. I'm gonna come up here. I think if I come up here and right click. So once I got the indicator up here, I come up here and right click. I'm going to click share, right? Once I hit this share button, it's going to put a link in here. Now you can watch the video, you can pause it and then get that link. But what I'm gonna end up doing is I'll put that link in the show notes. So you'll be able to look in the show notes to get the link. So I'm gonna click share. Hopefully I'll be able to, it be moving kind of fast. All right. I got the link. So it actually opened up for me because I clicked on it and I didn't want to do that. Let's see. If you're watching the video, you can get that. Oh, they don't make it easy at all. All right, I got it. Let's see. I'm gonna highlight it, copy it, and this will be in the show notes. I will put it down in the show notes so you'll be able to get the link. Like, cause if you ain't gonna be able to, if you ain't pause it fast enough to get that, I'll just put it in the show notes, right? So what I'm thinking about doing, you guys let me know if it's something that was easy, right? But you guys know, you see on my charts, I mark Fibonacci levels. I mark, like support, resistance. I can mark up charts. I don't have no problem doing that. And then I can share my charts. The only thing about that is, it is a little time consuming to do some of that stuff. So what I might do is have like a little join, where you subscribe and it'll be something real cheap. I don't know, maybe like $4.99 a month for like in the future. Like if you guys want me to, I can share my workspace. Like you can get my charts, you can get my watch list. I can make scans and share them, all of that stuff. And if you don't have Thinkorswim, you can download a free version of Thinkorswim and get the paper trading account, and you can put all that stuff on there and still look at it. Like if you use some other platform, right? So just let me know. Hit the like button, hit the share button, and that's a good way of supporting the channel as well, guys. And with that, I'm gonna be out. Peace.